Welcome back, MHD Capital. Let's talk about some of the opportunities we've seen in the last week, just to give you kind of a market update. I recently came back from South Florida. We had a few properties that we wanted to review in North Bay Road. It's basically Miami Beach, right? We've seen all over the news, David and Victoria Beckham just purchased a $72 million property. Those are the type of deals that we essentially focus on with MHD Capital. The type of property that we reviewed, that I actually put an offer on, was on the same street, very close to Beckham's house, but on the Dryland, meaning behind them. So same street, right? You have one houses on one side and then the houses on the other side. So we're talking about a very specific situation where on the Dryland, you have property that goes for $2 or $3 million. And then on the other side, you have property that goes like Beckham for 70 million, 50 million, 100 million. So as you can imagine, the opportunity to create something special in the Dryland can be very interesting, right? So you can buy a property for $2 million, tear it down, build a beautiful Mac mansion and sell it for $15 to $20 million, right? Because the street have a lot of value. So on the $10 to $20 million range, there is a greater pool of buyers that can afford those type of property. When you get to $50 million and up, you have to be a very specific type of individual, very wealthy individual that can pay, that kind of money, right? So sometimes we want to kind of look for proximity, in those markets and see how we can come in with our experience, with our aggressiveness and get those properties for a very good number. Because I always say, you make money when you buy the property, not when you speculate on it. Keep that phrase in mind. So what do I mean by speculation? Speculation is when the developer says, I'm going to build it and I'm going to make a lot of money on it. Okay, that's fine. But sometimes the market change. Sometimes you have to lease the property because, you can't sell it. We want to keep that in mind. When we buy into a deal, you have to remember, like each neighborhood, it's almost like you're buying a stock in that neighborhood. So, okay, let's call that stock, you have an Apple stock, you have a Microsoft stock, and you have North Bay Street. So I like the stocks that are kind of a blue chip stocks in the most premier neighborhoods and locations and specific streets, right? Because you can go to Miami, but there is a lot of streets that they might not be valuable as much, right? But let's say if we buy into a very specific neighborhood, very specific street, and there is another pillar, in that equation that, there is like, when you look at a specific street, there is different specific location in that street. So let's say North Bay Road, there is like, different numbers, right, for different properties. So if you're gonna buy, let's say, on a trade from 2,000 to 3,000 on that street, it might not be as lucrative as, where Beckham bought it, for example, where it's like, a specific kind of section on that street. So you have to be aware of all those details. And you have to be very careful when you place an offer. You have to do your due diligence. So that's kind of really the part of the process that I have to go through with MHD Capital and the type of properties that we are looking for. At this stage, we do not invest in apartments. We look into properties that we can create a lot of value. We are looking into properties that we can increase their value tremendously by renovating them and sell them, or buy land for development, or a third option sometimes is to tear down the existing structure and build a new structure. It really depends on what makes sense for each property and what's our goal for the location and who's our targeted buyer, right? So when we build, we want to make sure we understand exactly who's the property is going to be sell for, right? You have to have a target player. If I'm building, let's say, on the bay, on the water side, I'm thinking about someone like David Beckham, right? Somebody that can actually pay for that property and looking for that lifestyle. It's going to be a different lifestyle for someone that actually are comfortable leaving behind, the Beckhams in that case, on the Dryland, and still being in a very good neighborhood, in a very good location. So we want to invest in location we believe in that have kind of a long-term value. Those type of location not necessarily going to be affected by the market changes, right? So there is, for example, I'm right now in Malibu. There is like a location over here, it's called Carbon Beach, what they call the Billionaire Row of Malibu, the Billionaire Beach. Those type of properties tends to keep their value. So regardless of economical changes, when the market goes down, the market goes up, those tends to be a little bit more stable than any other location. So there is several locations in the US which gonna stay strong, and actually, like when the market goes down, that's where a lot of those billionaires and multi-millionaires, they come in and they snap those properties for a better price, right? But there is rarely properties that goes for sale in some of those markets. So a lot of the deals that we have to work with, like tremendous amount of agents, right? Real estate agents, real estate brokers. That's where, networking and relationships really can get you into the right situation, into the right deal. So I received many inquiries and, many requests from friends and families and followers over social media as well, over the years, and people wanted to partner with us and create MHD Capital, which it's the opportunity for what we call retail investors to partner with MHD Capital, with Moses Hershko Development, and invest in super luxury real estate, which that's really important to understand. This is a very, very specific opportunity. What I see in the market right now, this market, is crazy. I mean, the opportunity is tremendous, right? So, if we buy into the right property in the right time in the market, because you have to time out the market. I call it time out the market, right? Timing out the market, it's essential for success because you have to get in right exactly in the right time. It's not like when you buy a stock, sometimes, with stocks, you have to stay in the game for a long time. You can't just sell it, because you always it's very hard to kind of time out the market in stocks because things are fluctuating constantly. With real estate, especially since COVID, right? Before 2020, the market cycle used to kind of really fluctuate every 10 to 15 years. So real estate history can change, but based on history, usually the cycles are 10 to 15 to 20 years. For example, there is a specific, let's say, trend for period of time. So usually real estates tend to be pretty solid in a 10 to 20 year range, meaning if the market is down, it stay down for a few years. If the market is up, it stay up for several years. That's how it used to be before COVID. After COVID, we've seen that the market have changed tremendously faster. Like the market changed very, very fast. If you blink your eyes, maybe you miss up the opportunities. But you still have 6 to 24 months, sometimes 6 to 12 months timeline where you can really have a specific kind of situation in the market where there is uncertainty. So we've seen uncertainty throughout 2024. We still see some uncertainty because of interest rate and so forth, so it's really important for us to keep reviewing the market, keep kind of our due diligence in all those markets and look for the right moment to strike, right? So when the right moment comes, we are ready, we know the market, we know the location, and we're ready to write the offer and close the deal, right? So when we putting the offer on, it's very important to be slightly aggressive. Sometimes we want to pay actually a little bit more because online it's very difficult to know what any given property value is, right? Sometimes you get the wrong information online. You need to know better what's the property value based on your perception of the market, the neighborhood, in that specific street. So me, doing it for so many years and researching that market, I know exactly what I can pay for a specific property. Sometimes I will pay less for a property than what the research show, quote unquote, or sometimes I pay even more than what supposedly the property is worth, because the traditional approach, by different real estate investors is, looking at the comps, looking at, online, looking at different metrics and different tools that give them kind of that assumption. But since I've been building those type of properties for 20 years, since I've been doing construction on top of it, which that's kind of what I think missing for most investors and most funds that invest in real estate. They don't have the construction experience component. The fact that you are partnering with MHD Capital, with Moses Hershko Development, you get the experience of not just having someone that understands the real estate side of things and have the connections and the network with all those agents and brokers and access to very exclusive type of properties, but you also have the peace of mind that you're working with someone that understands the construction side of things. And I tell you why it's essential. If you are, let's say, an investor, you buy into a property, right? You need to hire a builder, right? You need to hire a general contractor. You need to hire different vendors and subcontractors. You start signing contracts with different type of vendors and contractors and this and that, right? If you don't have enough experience, you just gonna be in a situation where things getting out of cost, out of budget, you didn't plan correctly, you don't know the road ahead, so to speaking, right? The investment side, you already know that real estate investment can be risky. So the point is to mitigate those risks, right? So how can we mitigate the risk while we expediting the potential of returns on investment, right? We want to get in, design it right, build a very quality product that somebody like Beckham can purchase, and we want to make enough money that, we can also split 50-50 on the product and be very satisfied. So we want to get in, we want to do it right, and we want to get as fast as possible so we can maximize our returns. Personally, I don't like to invest in residential apartments because those potentially provide cash flow, right? If you buy the property in cash, we've seen a lot of syndication fund that's going to go, on auction or going to go bankrupt because they were relying on interest rate to be low and have enough cash flow to satisfy investors. So you have your money stuck for 10 years and, you're making only 4 to 6%. Potentially you're going to increase the profit margin over the years. But for us, again, I'm looking into opportunities where I can buy the property and sell it, in the 36 to 48 months range. So I want to get in and get out as soon as possible.